The UN has looked to boost new business through initiatives such as Timbuktoo and Africa Influencers for Development. I spoke to the UNDP's Africa Director, Ahunna Eziakonwa, who spearheaded that program, about what needs to be done to further boost entrepreneurship on the continent.
It's doomsday, if you like, for development programming and development financing, because for regions like Africa that are still in the middle of their development journey, the current global environment is quite hostile in terms of generating sufficient financial means to deal with all the development challenges. So this is quite a serious moment for development, because development funding is drying up, for one. But also the geopolitics and globally the issues around trade having a negative impact on actually boosting global growth, which eventually means growth everywhere else. So no, it's a moment to behold in terms of shifts in the wrong direction.
Well, and that brings me to Timbuktoo. Can you talk about the work that you are trying to do in terms of innovation and empowering local entrepreneurs? How are you operating in this environment, considering the challenges, and still being able to drive some of the innovation that you speak to there?
Well, we think actually that private sector is the direction that we ought to go with the overall decline in development financing. ODA has gone down sharply, but Africa has not fully leveraged the private sector. And by private sector, I don't just mean big corporates. I mean small, medium enterprises and startups. And actually, UNDP was put on notice about the potential we have, the opportunity we have on the continent, when a few years ago we saw the emergence within a very short period of time of 6 unicorns and an explosion in the startup space, with investors actually taking notice of that opportunity on the continent. Now, we saw the startup industry in Africa growing 6 times more than the global average, and that really caught our attention. And also the fact that the space was occupied by mostly young people. And these are the ones that we worry about, because on one hand, Africa has a lot of young people. On the other hand, the opportunities are few for them to actually apply themselves. So the startup ecosystem was emerging very fast as a place to invest. So UNDP decided to establish Timbuktoo, which is the largest initiative in the world to support the Africa startup ecosystem, to do 5 things. One, we wanted to solve this, the early stage risk capital gap. So although there was a lot of investment coming into startups, VCs were shying away from early stage because of the perceived risk. And yet we know that you need to grow a healthy pipeline for investors to be interested in. So Timbuktoo's first objective is to really bring enough capital to bear on solving that early stage risk capital. The second is actually dealing with the whole fragmented ecosystem. What we found was that there was a lot of interest, but there was no coordination or coherence around it. So Timbuktoo is generating this ability for us to concentrate, to converge support, diverse support channels in one location, and also to solve the sort of sector-specific issues. And of course, the idea that you really need to go Pan-African, the One Africa market, the Africa Continental Free Trade Area, has been launched. And startups need to be able to cross borders, to have greater ease at operating beyond their borders. So we're also bringing policy to bear, regulations that stimulate enterprise rather than stifle them. So that's, Timbuktoo has a policy impact team that is working on issues to do with Startup Act, startup regulations that will just ease the issue a little bit. And finally is this idea that we need to bring universities on board. And Timbuktoo wants to address the middle, which is growing gazelles. Those startups that will scale fast and become companies that are actually employing a lot of people.
The startup space is just one area private equity will be keeping an eye on. Let's bring in Genevive Sangudi, partner at Alterra Capital Partners, a private equity investment firm, and Bloomberg's Lonnie Prinsloo, who covers deals, tech, and M&A on the continent. Lonnie, let's just start with you. 2024, we saw a deceleration in investments from prior years. How is this year shaping up?
Yeah, so actually in 2021, 2022, we saw quite high valuations, and then we had a bit of a correction in the market. That's what you saw in 2023 and 2024. What happened consequently in 2024 is a few big funds were raised specifically for Africa. One of them was Genevive's Alterra fund that's going up to $400 million, and she managed to pull quite a lot of interest from billionaires like Sangudi, Carlyle founders. Ahunna raised a fund of $470 million. We're seeing Helios targeting quite a large fund of around $800 million. They haven't closed yet. But consequently, what then happens, if you close those funds, you have to deploy the money.
Yeah, Genevieve, jump in here. I mean, what are you seeing from your vantage point?
So, Jennifer, I just came back from Lagos about 2 weeks ago, where the African Private Capital Association was hosting its annual meeting. 800 delegates from around the world, both from the continent and globally. So we're talking institutional investors, development finance institutions, GPs, as well as LPs. And what was really also interesting was that we had a lot of domestic investors. So you had pension funds, sovereign wealth funds, et cetera. And what I can tell you, I've been doing this for 20 years, and the optimism in the room, the energy in the room, the renewed focus on actually working hard to deliver risk-adjusted returns for Africa that would be globally competitive was really, really palpable. So in terms of deal activity, if I even look at Alterra, over the last 18 months, we have closed 4 transactions. We have 3 more transactions that we are actively working on that we expect to close this year. So I think, just looking on, Q1 this year versus last year, I think we've already reversed that trend in terms of deal activity. And as Lonnie said, some of our well-respected peers and competitors are raising massive funds, so we expect to see them in the market. I think that there's still significantly more demand for capital than there is supply. So I don't hope that prices will be driven up as a result of that, but I hope we're all just going to invest wisely and continue to make Africa an attractive investment destination for global capital.
But when you look at some of the data points that are out there, and in particular what caught my eye is the investment to exit ratio, right? That is still quite low if we take a look at the other parts of the world. How does that factor into your sentiment right now as an investor, especially when you're looking at the startup and the entrepreneurs and the companies that are out there to invest in?
Jennifer, that's an absolutely accurate point, and it's something that has to be resolved. So Africa has suffered from a dearth of liquidity and a dearth of exits in the private equity and venture capital space, and that is part of what has made capital flows into the sector lower than they should be. However, it's a big continent, right? 54 countries, very different macro, social, political dynamics. If you look at just the data in terms of the number of funds that the African Private Capital Association tracks, it's something like 450. Which, just imagine how broad a spectrum that is, right? So if you look at the macro numbers, I see why that makes sense. However, if you look at top decile managers, I think the trend then looks very different, which I think is how we need to dissect the data as we look to present Africa as an attractive investment destination. And so I think the lesson for all of us here should be buy good companies, maintain pricing discipline, be a very value-added, hands-on investor. And from an Alterra perspective, we find that it's easier to exit control investments. You're in control of your destiny. You are able to do ESG and tech transformation, which I think makes companies more sustainable, more resilient, and more attractive to, global strategic players and financial investors.
And some of those points that you brought up there, Lonnie, tech, sustainability, scalability, I mean, those seem to be a lot of the describing factors for the unicorns that we see on the continent, which are quite small. Is your expectation, based on your reporting, that we'll see more unicorns in the near term in 2025, or is it shaping up to be a few smaller companies that are maybe more scalable that we'll see arise?
So in terms of unicorns, as I sort of previously mentioned, we had some big ones come through, mostly from Nigeria. We had a flutter wave at those high valuations that we talked about previously, backed by a lot of US money and so on. What we are noticing, or sort of as I do the reporting going along, we are seeing some South African companies building a bit of scale. We saw Time Bank recently become the first unicorn actually in South Africa. There's some other payments companies that are doing well, maybe not quite yet at unicorn. Zao might make it this year, next year.
Wow.
So not many unicorns, but companies are definitely building scale. We recently did 25 African startups to watch, so that's smaller scale. But it was very interesting to go through the data, and between some of them, they are planning smaller raises, but that's how you build your scale. That's where it starts. And then Genevive comes in at a later stage.